Welcome everybody, welcome everybody. It is another video and we will be dealing with market structure. Market structure. This is another standing pillar of trading. We'll be dealing with market structure and this is the standard pillar of trading. Now, what is market structure? What is market structure? Now, you could write this down. Market structure is the study of the physiology of a certain market. So, that is, it is the study we are studying. That's the one keyword. Studying physiology, the somatotype, the in and out of a market. So in market structure, we are studying the physiology, you can call it the somatotype, you can call it the in and out of the market. And market structure is the second pillar of trading on technical analysis that we'll be dealing with today. Market structure is what we use to determine why we take a trade and when we take a trade. The two basic market structure is divided into two. So we have M structure, and there is now divided into two. An uptrend or a bullish market. And a downtrend or a bearish market. Bull in trading signifies up. Bear in trading signifies down. So very simple. Market structure is divided into the uptrend of the bullish market and the downtrend, which is the bearish market. So from an uptrend and from a downtrend, you can understand what market structure is all about and what a chart is telling us. Now, an uptrend can be defined as an upward movement of the market, a going up movement, a movement in the direction of the sky, while a downtrend is direction in the direction of the earth. Very simple. So we could draw a chart. We would call this what? An uptrend. And this we called the downtrend. As I've said, the direction is down, direction is up. Very simple logic, easy to understand. Now, let's get into the more technical parts of market structure now. Why do you notice that I always draw my charts? I don't draw my charts like this, straight up. I draw my charts with all these in a zigzag format. Why I do this is because of highs and lows of the market. The market does not move spontaneously. At every single point in price, there are always sellers and buyers. A market cannot only be ruled by buyers only or sellers only. Buyers and sellers are in the market at the same time and they take their positions at where they deem fit to take their money. Now, we're given a chart, a logarithmic chart. This line represents 4,000, 3,900, 3,800, 3,700, 3,600. In the last class, I dealt with psychological levels, so you should understand that these are major supports and resistances. Example is a gold chart. Gold is moving on an uptrend, right? Gold gets here, it gets pushed down. But the trend, the buyers are still in the market. It pushes higher, it comes down, pushes higher, it comes down, pushes higher, it comes down. And from there, it goes to the next place that he wants to go to. Now, this is a typical example of what a chart should look like. It's a typical example of what a chart should look like. A chart is never spontaneous, as I've said. A chart moves in zigzags. It moves in a controlled direction, either in an uptrend or either in a downtrend. Now, let me explain to you what are higher highs and higher lows. So, now let's deal with an uptrend and everything that has to do with an uptrend. Let me draw a simple chart. In an uptrend, we have what are called higher highs and higher lows. Now, those are the swing points I was talking about in a class of demand and supply. And what can we deduce from that? A higher high, HH, equals to higher high. A higher high is the highest point the market reached before it had a slight bearish momentum. While a higher low is where the market stopped and continued in the uptrend that it was going in. So, if we are to come onto these charts, we can notice that this is a higher high. If I'm correct, yes, I'm correct. And this is a higher low. This is a higher high. This is a higher low. Higher high, higher low, higher high. Very, very, very simple. So market moves in higher highs and higher lows in an uptrend. Market moves in higher highs and higher lows in an uptrend. So swing points are higher highs and higher lows. Very simply, swing points are higher highs and higher lows. So when we are dealing with an uptrend, we always want to split out those higher highs and higher lows and wait or look for markets to come back to it. This is a very strong area of support and resistance. This also is a very strong area of support and resistance. It was supported here, it was resisted here, and now it was supported here. Resisted here, supported here. So that is just the mechanics, the market structure in an uptrend. Now let's go to a downtrend to see the flip side of it. In a downtrend, the market moves in lower highs and lower lows. So now we have dealt with a downtrend, cancel out. An uptrend, cancel out. Higher highs and higher lows, cancel out. Now we're dealing with lower highs and lower lows. So in a downtrend, the market moves in lower highs and lower lows. Lower LH is for lower highs, LL is for lower lows. So lower highs is, let me start with lower lows. Lower lows is the swing point that the market came to and supported. So market was moving in downtrend and it was supported here. So we can call this a lower low. Then when price stops to go in the opposite direction of the major trend, which is to be called a lower high. So the exact same thing for here is called a lower low, lower high, lower low, lower high, lower low, lower high. Very, very simple. And now we could draw The support and resistance here. Same here. Same here. Same should be here. If price comes back, tap into it. So lower highs is where the market stops going in the opposite direction in an uptrend and switches back to the main trend, which is the downtrend. So now we are done with that, and lower lows is where price got to, resisted, then broke through it. We expect to break through. Now let's look at an impulse. So let's use an uptrend. In an uptrend, what do we call an impulse? An impulse is the volatility of the market at a certain point in price that drive it up so much with no resistance to the flow of price. So where can we notice that here? From here to here is an impulse. From here to here is another impulse. Price did not stop until it got to this point. From here to here is an impulse. And from here to this next high, another impulse. So what can we then deduce? We can deduce that from every higher low to a higher high, there is a massive impulse. From every higher low to a higher high, there is a massive impulse. Higher low, higher high is a massive impulse. So from every higher low to higher high, there is a massive impulse. And that is the same for a downtrend. So in a downtrending market, this is an impulse from here to here, here, from here to here, from here to here, from here to here. So the impulses are these massive moves that are not being stopped by price until it gets to a certain point, support or resistance. So now that we have deduced what an impulse is, what is a correction? That is the next thing. What is a correction? So we are moving in an uptrend. A correction is where price stopped and took some liquidity. It rested before continuing an uptrend. And in a downtrend, the exact same thing, where price stopped and cooled down to collect some liquidity before continuing an impulse. So we can call this an impulse, and we can call this a correction because it is a minor move of the market. The original move is an uptrend. So any move that is not an uptrend is a correction. This is an impulse, this is a correction. Impulse, correction, impulse. So I hope it is understood properly. Impulse, correction, impulse, correction. Very, very, very simple to understand. Now let's move to a major structure and a minor structure. A major structure is the bigger move of the market, and those are usually the impulses. So in an uptrend, price is moving in an uptrend. This is the major structure of the market. This is the minor structure of the market. So we can see an impulse is the major move of the market, and correction is the minor structure of the market. So this is what usually fakes traders and makes traders think that this market is going back down. So a trader can see a market like this, price moving in an uptrend. Then suddenly they start seeing this. What would this state to most people? To most people, this market is now going in a downtrend. But this is just a minor structure. It is the same thing as this. Just that this is a more lower time frame. Let's say that we were analyzing this market on the 4-hour time frame. Somebody could come down to a 1 hour time frame and be seeing something like this. Market was moving an uptrend before, then suddenly somebody is seeing something like this. The person can think, okay, this market is now going down. But no, this is just to fake people out, collect more liquidity, and continue to push to the upside. So you need to properly deduce what a major structure is and what a minor structure is. Now, relating this to a BOS, done with a BOS. A BOS is called a break of structure. A BOS is a break of structure. Now, what is a break of structure? Let me put this on the chart so that you can understand. A break of structure is when price in an uptrend breaks the last higher low that it made. In an uptrend, this is the higher high, the higher low, higher high, higher low. We can call this, you just draw a simple trend line, BOS. Now, this is what means that price is moving in a what? A downtrend. Because now it has broken our former low, higher low, indicating that this market is not moving in an uptrend. Because the criteria for something to continue moving in an uptrend for is like it should not come back, it should not have a candle close below the last higher low that the market made. So a BOS is only attainable or only observed when price has a break of the last higher low with a candle close, meaning that the candle closed below it, saying that this is a bearish candle, not that the candle was something like this. This is an uptrend, this is the break of BOS, and you saw something like this. This would not be called a proper break. It is just a sweep of liquidity, a liquidity sweep. We will understand this liquidity sweeps, will understand them more better and why they happen. But it's closed out with a wick. This is the candle close. It's still above the last higher low, and it's the same for a downtrend. If price is moving in a downtrend, price should not come back to the last lower high that it made. So if price comes back to this lower high, breaks it, we call it a BOS. With a candle close uptrend, that's what we can see is a BOS, and now we are looking for buys. So you look for sells in the market, in a downtrending market, and look for buys in an uptrending market. Now for an SOS. So an SOS, price moving in an uptrend, it breaks structure. So now let me start marking all those things that we have learned. Impulse, I use I, C, I, C, I, C. I, then now this is another I. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower high. Lower low, sorry. Lower low. So an SOS will be noticed when price comes back and then gives us a new lower high. So now we know that price is moving a proper downtrend. So an SOS is when price breaks structure, comes back to take some liquidity, forms a new higher low, and breaks the last lower high. So we have a BOS to here. That is when we can call this, no, this, yes, this is a BOS. That is when we can call it an SOS. I think I made a mistake. Sorry. Oh god. I just thought about this. A BOS is when price breaks the last high in an uptrending market. So this is a BOS. I'm so sorry. This is a BOS. I'm so sorry. Please take notes. Please take notes. My mind was still on that gold trade I took yesterday that was in so much profit. Sorry, BOS. And SOS is when price breaks an uptrend, breaks a direction of the market. So this is an SOS. So I was supposed to explain SOS first, I confuse it. So an SOS, sorry, I don't even say what an SOS is. And an SOS is also called a shift of structure. That's the main name. So a shift of structure is price moving in a completely different direction. So this is an SOS first. Then when it is followed, you can have a BOS. So until you make this new lower high and continue moving up in a downtrend, that's when we can notice that this is a downtrending market now. We can confirm it's a downtrending market because price could still candle close here and continue going in an uptrend. Still very very possible. The market is very unpredictable. It doesn't follow simple theories. News affects the market heavily. Affects the market heavily. So now let me give a simple uptrend trending chart, and then we can talk about how it's going, and we can notice every single point of the market. So I give so we look at this chart. So now let's put in everything of learning. So we use an I for this impulse here. We will call this the major MS. So this is an I and an MS. Major structure. We will call this a higher high, call this a lower high, call this a minor structure. We will call this a correction too. And that is the same for here 1, 2, and 3. Now when we get here, we identify an SOS with a candle close. We then look for a break of a BOS. This is a BOS. And now we can notice that this is a downtrend. So this is what? A minor structure. And this is now the major structure, major structure. So very simply, this is all that we have learned today. So this will now be called the lower low, the lower high, now the new lower low. So exactly all that we have learned today. So I hope everyone understands it. And now let's go on to the chart to look at something. Let's go on to a gold chart to see it in real price action. No, an NZD USD chart. So now let's go there. So now price is moving in an uptrend. So now price is the exact same thing I've been saying. Let me just look at this price action. Okay. So let me just do this, bring it here, bring it here. Okay. Now it's the exact same thing I was saying. Price moves in an uptrend. So it's here. This is the correction. This is major structure, minor structure, correction, major structure, minor structure, correction. Now we are looking for a new higher high. So in this market, we will be willing to buy. So in this market, what are we looking for? We are looking for buys and buys only. Let's go on to another chart and see something like this. Let's look for an SOS in the market. Let's look for an SOS. So okay, here this place is a very good example. What do we notice? Price is moving in an uptrend. Let's start from here. Price moving an uptrend, impulse, correction, impulse, correction, impulse. Now what do we notice? This, now let me show you something. Some people will call this a BOS already, but this is just a candle, it's a wick, so we cannot call this an SOS. So we have to look at this one, this big black candle here, to say now this is a new impulse, a very long impulse, and now this is in a downtrend now. So until it forms a new lower high, then we can continue trading this market. So now we're looking for a what? A lower low. Very, very simply. So I can then state that price. Now let me look for a trend line to draw. Trend line. Where's my trend line? Where's my trend line? Boom, 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 boom. Trend line, sorry. So I would say that this is what a break of structure. I'll come down here. So you can see I have everything here. Liquidity, super SOS, blah, blah, blah. This is a bearish break of structure. So it will put that there, BOS. Then, no, this is an SOS, sorry. An SOS. SOS is here. I'm always mixing it up, sorry. SOS. Then this, we're looking for a break of structure here. So we are anticipating that price forms a new lower high to continue moving in a downtrend. So this is exactly how to put the same thing on the chart. So as I've said, higher highs, higher lows, lower highs, lower lows, downtrend, higher highs, higher lows, uptrend. A BOS, SOS, major structure, minor structure, downtrend, uptrend. I hope that you can review everything that we have done, listen to this clip twice, thrice to understand it more. And any questions, drop it in the comment section. We will be there to answer you. And also like, subscribe, comment. We love you from FSH Capital and we want to see you succeed. And if you want to join the mentorship group, the link will be in the bio. And you can use a discount code of capital IFE10 to get 10% discount on your purchase. So let me put that there. Let me put this there. See. So E10. So you can use this discount code to get 10% off your monthly subscription for the mentorship. And I would love to see you on the inside taking our trades. We took this beautiful trade last night. Everybody in the community was so happy. This was a beautiful, beautiful, sweet, beautiful, beautiful. Oh, I cannot say how beautiful it was. Straight to the point. We took all the liquidity of the market and we ran with it. So let me give you a trade. So we took this trade. We could have held it longer. I should have held it longer. But we just took this beautiful trade. 2 candles and we made our money. 2.73 is the reward. We made our money. So thank you for listening to this and have a blessed day. Bye bye.